Welcome back to Ultimate Trader. Taking a look at Shiba Inu, pretty much the craziest story out there now. So we had this crazy run up. This is a daily chart, as you can see here, hopefully, that everybody wished they were on board for, including me. And you know, it's so hard to get out, even if you were long at the opportune time up here. It's almost impossible. But so now we've come back down here, so we want to look at some key levels here on potential trades, potential spots to get back in, or if you've never been in, where to initiate something. Just want to say this is not financial advice. We're not telling you to buy it or sell it. These meme stocks, I mentioned this in a previous video about the Squid Game coin that literally went to zero. So that does happen. Again, I was talking about Dogecoin at the time, which I don't in any way see that happening to Doge. And most likely not this, because it's got so much attention, but just putting it out there. So I'm going to refer to the prices in cents, but obviously it's 0.00004413. I'm just going to say 44 cents, just so we don't have to waste a bunch of time. So you can see that basically after making this high up here, somewhere around the 86 to 87 to 88 cent range, we've since sold off. You know, we had a couple attempts back up, and then we're back down here. This support area that we just hit and kind of bounced off of, which we'll go into a smaller time frame in a second, you know, is a reasonable place to take a long, and I still think it probably still is here. But you know, that's still an aggressive area in my opinion. I think the area that is more interesting to me is this next one down here. This call it 33 to 36, and I'll show you why. So if you take the entire move here, and you look at the percentage of the pullback, so the move started down here, went all the way up here, and now we've pulled back pretty significantly. So this is the 50% retracement. This is the 61.8. So this low here that was just made yesterday was right in the middle of those two. So you know, this area down here, the 78.6, that would almost negate the entire move. But you know, these areas below here, those would be the three support levels that I would be looking at personally. Again, I'm not recommending you get involved, because these coins are very violent and volatile. So, but generally speaking, on any move in any sort of asset, whether it's a stock or a crypto or regular currency, generally when a move like that happens and you come all the way back down and take out, you know, even much past the 61.8, but definitely the 78.6, you've kind of negated the whole thing, right? Come close anyway. So at that point, you know, you got to sort of at least question whether or not it's got the ability to get, you know, all the way back down here. So anyway, if we go back in, or if we go into the 2 hour here, you can see that this area is not as, it did get a great reaction, and that's the area between the 50 and the 61.8% retracement. And once you get that big of a retracement back down, it's not crazy to think that a bounce like that will happen. I'm not saying this is an easy trade to take. It's not, but you know, that's kind of a significant move. The other thing is, you know, it's only a couple days, but we've got this whole area. So sorry to go over the resistance zones here, but so this whole trading area, it broke down from, tried to go back up, and then has since sold off, right? So you've got this whole area to sort of contend with. And then, so that's why even taking this, you know, you want to have a lot of room to run, and it does, but you know, you just want to be aware of the sort of the bottom of this, which is down here. But I think that the purpose of this is this area here around the 33 to 36-ish, like I said, I think is a reasonable place to take a long. That is the beginning of the massive move up. And personally, were I to take it, it would be in the 34.50 to 35 type area, just to sort of get a little more granular. And then you've got this support around the 27.5 to 20 or to 30-ish cent range. And then this is the big one, the 71.8% retracement area. We'll go back out and look at that in a second. That would be the one that really kind of has to hold, and probably has, if it holds, a lot more potential. But I think this does too, personally. So you want to manage your risk here, guys. You don't want to be just, putting a ton of money into this and, see it drop below these areas. So just mind your risk on this stuff, because these coins they're very volatile. Even if sometime in the future it goes right back up and makes all-time highs, which would be great, but you got to be able to sleep at night too, right? So so here's the first area that we just hit. If you're super aggressive, you could try long here with a stop. You'd want it right around the 40-cent area. And that means when you take a long, if it hits that, you really got to exit. I mean, there's no way around it, right? Because in order to have a reward to risk profile, you have to have a standard, a set risk, right? So whatever that dollar amount is, whether it's $100 or $1,000, you buy X amount of coins that if it got down to the 40 area, you would lose your $100, let's say. But if it works and you got, let's say, back up to the 60 area, or even better, the 70 type area, 70 to 73, you get such a multiple on your risk, right? But this is, it's easier said than done, of course. The next area here is this 32, 33, let's say, to 36. And then this is the one I have talked about a couple times, around the 20 to 24 half, 20 half to 24 half. That would be the area that, if it held, would probably produce the biggest move, in my opinion. So hopefully I didn't get too far in the weeds here, guys. But, the coin hasn't been trading. It's been trading, but it's been down here forever, since its inception. So we can only look back to here for any sort of guidance on technical levels. So at least I guess we can say that they're pretty clear-cut, in my opinion. Doesn't mean any of them are going to work, because we never know the future, of course. And be careful with your risk. So that's it for this one, guys. We'll talk to you in the next one.